Hello everyone, welcome to this episode of Your Life, Your Money. Today I'm going to take you through a NRI perennial dilemma and try to find a logical answers to it and a solution how they can solve this particular problem. This problem is, should I invest in the developed markets or should I invest in the Indian markets? This is a problem and it can be argued on both the sides. So we are going to take this problem and dissect it part by part to find a logical answer to it. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Are you a NRI living outside of India for more than 10 years? Have you dreamt of a retired life in India in a beautiful house and a lifestyle of your choice? Your dream can come true only when you take some simple and effective actions today. I will take you through a step-by-step process to make this dream come true in my webinar, Stress-Free Retired Life in India. Hello, I am Dr. Chandrakant Bhatt, financial guide and founder of YouTube channel NRI Money Clinic. I have to my credit creating secured retired life for thousands of NRIs spread across more than 60 countries. If you have an intention to make your dream retirement come true, register for my webinar. More details are in the link below. The perennial problem of NRIs or the dilemma of NRIs is a confusion between should we invest in the developed markets of the West or should we invest in the Indian markets? What are the arguments in favor and against this? You can argue this from both the sides. We can take arguments to say you must invest in the developed market. We can take arguments to say you must invest in Indian markets. So this is a never-ending story. So finally we have to find a solution around it. So how to go about? Let's take point by point. Let's look at the advantages and disadvantages of each one. Then look at the specific issues of NRIs. And then we'll figure out, is there an alternative which is available? Can there be a solution to this particular problem? Let's look at the developed world. Now you saw how the US markets gave a stellar return post the pandemic period. It gives so much of a return that every fund house, people in the investment world campaign that the US markets gave you so much of a money, and everybody is believing that that story is going to play out for as long as they live. Unfortunately, that need not be the truth. But am I saying that what happened in the last 3-4 years, is it wrong? The answer is not wrong. But the fact is that this massive uprise in the US market is a sequel to the printing of money, excessive liquidity pumped into the market as a reaction to the pandemic induced lockouts and other things which found its way into the market, creating an asset bubble. That is the dissecting of the past. Let's look at the advantages and disadvantages of investing in a developed market. A developed market is a very stable market. It's a market which is mature. It's a market where it is highly crowded and every sophisticated investor, from institution to hedge fund to individual investors, brokerage house, the high net worth individuals, super high net worth individuals, private bankers, everybody will crowd into this. There is a general confidence in the market, and these are very well regulated markets. So things are unlikely to go wrong. That is the strength. The developed market, most of the money is in the US dollar, which is the base currency or the mother currency or the world's reserve currency. That gives a confidence, or that's the advantage of our developed market. The markets are highly liquid. You own any assets, be it the bonds, be it the equity, be it any kind of an asset, they have got great liquidity in these markets, making them very attractive to hold your investment. Are these markets free of any disadvantage? The story is incomplete unless I tell you what are the disadvantages of the developed market. The disadvantage of a developed market is that these are saturated markets. People are habituated to investing in the equity. So it's not that the very few people who invest in equity and not many people are investing there, thereby still a possibility to grow. So these are saturated markets. Information flow is maximum. when the information flow is distorted, or only when few people have got information, or only a few section of people have got few information, then it creates an investment opportunity. Whereas the information flow is quite democratic, most people, most participants in the markets have the required amount of information, so that gradient that is required, some people having knowledge, some people not having knowledge, that's not there. The countries do not have great inflation. Don't go by what you see today. Say it's an inflation which is induced by flow of money, infusion of liquidity into the markets. That's why there is an inflation. Inflation can come because of demand. Inflation can come because of the liquidity push into the market. That's what the inflation, what you are seeing today. It's a liquidity or the flow of money into the market which has created that inflationary pressure. But underlying demographies are not favorable. The growth rate is not favorable. Once this liquidity issue of the markets gets sorted out, they are likely to fall back to where they are, which is closer to less than 2% inflation. Do you remember that period from 2010 to 2020? The central bankers of the developed world working to kickstart an inflation. These days they are trying to bring down the inflation, but for 10 long years, more than 10 long years, they were trying to kickstart an inflation. So the inflation, if it is not there, it means there is no growth which is possible. So this works against the markets. And US literally between 2010 to 2020 hardly had any growth. This is the same story across the developed market. While the past 3-4 years data gives you a different story or a different meaning to these markets, but the underlying of these developed market is not a great story to tell. Nevertheless, for people who do not want currency fluctuation, people who want to stay safer in a very highly regulated environment, developed markets still offer a great investment universe for all of them. One another disadvantage of developed market is you don't find great opportunities beyond index. See, in the process of growth, what has happened is the bigger companies have gone into amalgamations or mergers and acquisitions, and they have gobbled up the smaller companies and they have become the giant companies. Today, there is not a great deal of opportunity which is beyond index in case of the developed market. If at all, if any opportunity exists, it may not be available for the general public, but it goes to the informed persons or the super HNI category which is served by the private banking clients or the private bankers who cater to this segment. So for the general public, opportunity beyond index is very rare now. Let's look at the advantages and disadvantages of investing in the Indian market. Indian market gives a contrasting story compared to the developed market. What's the story here? The advantage is India is a democratic country. Unlike in China, which is more communist, autocratic kind of a rule, India is a democratic country. Irrespective of the party in power, we have seen in the last 75 odd years all kinds of parties, all kinds of combination. But India has grown irrespective of the party in power, which means there is something which is other than the government which is creating the growth, which is the underlying economy, the demographics, the younger population of India, the unsaturated demand in India is the one which is creating the growth in India. The democracy works like a tailwind for the requirements of the general public to take the shape of a business and create stock market return. You can see now in India, lot of people are moving up the poverty line. Forget about the poverty line. Look at the number of people who are moving to the middle income category, higher income category, and high income category. India is a mixture of poor people, middle class, upper middle class, high net worth individuals. So there are many countries within this country, and if you look at the individual sector of high income, middle income, higher middle income, they represent a country by themselves. And many of the constituents of this economy are much bigger than many of the developed world. That's why you have a great demand in real estate, great demand in cars, great demand in luxury goods. There is a high demand for the properties which are expensive, luxurious in nature. That's because within the India, which is said to be a poor country, there is a rich class of people who are there. There is an aspirational generation who are moving really up the ladder. Look at the South India story there. People are affluent. The replacement rate of population has come down, which means both husband and wife working, they have more disposable income, they have more aspirations, they are moving to bigger houses, they are buying better cars, sending their children to a better school, good school, they are sending them to education abroad. All these is a sign of economy really booming in India. The information flow is not as uniform as like in case of developed markets. So there is always the mismatch between what people should know and what people are really knowing, creating a lot of investment opportunities for those people who have got the right information. There are small companies which are growing very fast. There are mid companies which are aspiring to become large. You have the bigger and the giant companies. The Indian investment universe has all the options. It's not that the opportunity is only at the index level. You find opportunities at every level in India. Indian regulators are second to none. In fact, Indian regulators have done phenomenal job in the last 30-40 years. You have seen how Indian regulators have managed the massive scams that happened worldwide 2007-8. During that particular period, our RBI conducted itself in such a fantastic manner. India never had a problem because of that scam. That's the credit we have to give to the Indian regulators. So there are a lot of plus. This growth is something which is not going to get saturated in 1 year, 2 year or 1 or 2 decades. Since the entire country's population is made out of a population average age being less than 30 is an indication that this growth story will continue into at least the next 2 to 3 decades. That gives an ample opportunity for people to make killer money if you stay invested in India. Does it mean to say that India is all good things and there is nothing negative in India? I will not be telling you the whole story if I tell you only the good side of it. There are ugly sides of it. There are not so good side of investing in India. Number one, the problems of repatriation. You put a lot of money into it and you may find it difficult at times to repatriate the money. Taxation could be the other one. But the biggest challenge the NRI population finds when they invest in India is unstable rupee. The rupee, because of its growth underneath, naturally creates inflation, and the inflation results in depreciation of the rupee. In the past, in the decade up to 2010 or so, up to 2012-13 period, Indian currency used to depreciate a lot. It used to depreciate at a rate of, on an average, about 4% to 5%. But those are the days of that zamana. This kind of a rupee depreciation is not happening from 2014. I'm not making a political comment here, but why it's not happening is because of lowering of inflation. The depreciation of rupee happens when there is a gap between the two countries in inflation. You remember those 2010 to 2015-20 period, then the US had inflation of less than 2%. If the inflation in India were to be 7-8%, that creates a fertile ground for the rupee to depreciate. But now look at the situation today. The recent report says inflation in India is below 3%. Where does the inflation in the developed world in the US stand? In comparison with this, look at what is the FCNR rates in India. Look at the FD rates or the savings banks rates in the US. They are almost similar. So there is no differential between inflation and the interest rates both in US and in India. So this makes rupee a stable currency. Does it mean to say rupee will permanently remain here? Rupee will not burst down from here? Unlikely. Because it's an emerging market, because there is a growth, there will be an inflation. Because the developed markets do not grow, the inflation over a period of time is bound to come down. So as long as an inflation differential exists between the two parts of this economy, which is developed world versus the Indian investment, rupee is likely to depreciate. However, this rate of depreciation has come down. I was talking to one of the fund managers during one of my recording of the videos, which will get published in a couple of weeks from now. So he was telling that it's unlikely that the rupee is going to fall down drastically. There is nothing which suggests that the rupee will drastically come down. The best case scenario they expect is a slow downtick on the rupee. However, they are all telling one thing. we cannot rule out rupee appreciate against the dollar. That's something of a news we have picked up during the last couple of months conversation with informed circles of the market. The volatility of Indian market is another thing. In the past, Indian markets used to be very volatile. The moment the FIs come into the Indian market will go through the roof. Markets will fall like nine pins when the FIs used to pull down from the Indian market. But you have seen in the recent fall from 86 to 72, in spite of a massive pullout by the FIs, Indian market showed a great resilience. What does it tell you? It only tells it is a domestic flows which are propping up the market. The volatility of Indian market, the vulnerability of the Indian market, as seen many decades before and what it is today, is much different. So India is slowly, steadily is showing the signs of becoming a developed market kind of a story which is developing here. It's still far away from there, but it is showing the same signs of getting into a matured economy. That's what's happening in India. I told you the advantages and disadvantages of investing in the developed market and the Indian market. Now let's see what does history has to tell us. If I compare the history of investing in both these markets, where do we stand? It's absolutely clear that people who invested in Indian markets are the ones who made more money than the people who invested in the US market. If you dig into the last 30 years history, the US markets gave just around 7% CAGR in dollar terms. If you compare the Indian market's performance in dollar terms, when I compare the performance of the Indian market in dollar terms, it takes into account the rupee depreciation also which has happened, and see whether it makes sense for you to invest in Indian market in spite of swallowing that insult of rupee getting depreciated. The answer is Indian markets have given higher than 7% in dollar terms during the same period, which means to say if you are a long-term investor, in spite of the rupee depreciation, you have made more money by investing in India. But the price you pay is the volatility. The price that you pay is the frequent bouts of rupee depreciation, creating panic in people and people moving suddenly in and out of the market. These are the problems. What does history say about rupee depreciation? Rupee used to be depreciating 4 to 5% on an average prior, but now, as I said earlier, this rate of depreciation has drastically fallen down. If you look at any data points, there is nothing which suggests that the rupee is going to fall down like the way it used to be. And we will not even rule out in distant future, maybe 10 years from now, rupee holding absolutely firm against the dollar, or even rupee appreciating against the dollar cannot be ruled out. But I don't have a crystal gaze to say this is the way it happens. It might happen. It might also happen in such a way that slow depreciation of rupee can also happen. Future is always uncertain. You cannot predict anything. Today you have a dispensation in India. It has an orientation. If this changes, how it will happen, we do not know. Over 15, 20 years, how things will happen, what will be the political landscape, what could be the demographic advantage, disadvantage, how it will pan out. Will India succumb to disturbances domestically? Only a future can answer that question. So these are the points you know already. What's new in this video? The new thing in this video is a doubt that is being expressed in the strength of the dollar. I do not know. I don't have a right answer. But if I see it from a common sense angle, there is panic in the dollar. There is panic expressed by the governments. For example, you see what's happening in the US. US is pushing on tariffs. What does it mean? Either you are trying to protect the dollar or trying to solve your balance sheet problem over there. Likewise, we heard about this one beautiful bill which came into existence. Never in the history this has happened, and you are putting a 1% remittance tax from US. Again, you are holding back the dollars, trying to protect the dollar. Trump announced citizenship for people who come in with $5 million investment plans. All these things tell you only one thing: dollar is on a weak turf. What's going to happen beyond this point, no one knows. Recently, we heard that rating of dollar has come down, which means the underlying is weak. While we all believe that the dollar is going to be very strong, Look at the kind of the balance sheet that they have. Look at the kind of borrowings that they have done. Look at the challenges that they face. Look at the decaying demographic trend that is the world is going through, the developed world is going through. Dollar losing strength this point onwards looks very likely, and that's the view which is emerging from my discussions with informed circles. However, again I stress here, it's my personal view. It's not a researched view. This is a common sense view, and how the future will unfold, only future can answer. None of us can exactly predict this is what's going to happen. One of the reasons why gold is going to go up, or why it has gone up, is for the simple reason that people are suspecting the strength of the dollar. That is making gold climb higher heights. This is what exactly is happening. The message here is we have to take decisions in an uncertain world. Future is again uncertain, but we can't wait for the certainty to emerge. We have to take decisions today itself. NRIs have got their typical problems. NRIs, will I remain permanently an NRI? Will I change my citizenship? Will I stay permanently outside of India? Or I'll come back to India. A lot of NRIs have got dilemma. They want to live outside of India, but political turmoils, the events of recent times are creating the doubts in their mind. Instead, I will come back to India. So we deal with a lot of people, and we get to hear the views of people from across the globe. There is a fear sense in NRIs, and they want to be connected to India these days more often than what it was before. So this creates dilemma. Should I put my money outside? Should I put my money in India? Return is not the only criteria which matters here. What's going to happen? If my children were to study abroad, I need dollars. What if rupee were to depreciate against all the knowledge that we have? How will I manage the requirement of funds for my children's education? A lot of people who want to stay in Dubai during their retirement, they don't want to get into a taxation network in India. Dubai is a tax-free country. They have lived a great part of their life there. They have got properties there. Rental expenses are taken care of. They've got a good health care. They may want to live in Dubai. So what should they do? Where should they park the money? Let's find an answer for that. I cannot give you an exact answer. You put this money in developed market, you put this money in the Indian market. A simple way to solve this problem is invest in both the developed market as well as the Indian market. You put 50% there, 50% here, which means your investments are 50% in dollar terms, 50% in Indian terms. You are hedging one against the other. Let the rupee appreciate against the dollar, so you have the rupee assets. Let dollar appreciate against the rupee, you have the dollar assets with you. Let the developed market go up, you are hedging the Indian market against the dollars, against the developed market, and the vice versa. So this is the best course you can take. The crucial question is, how do we do that? So the Indian market allows you to invest only in India. The developed market, of course you can invest in India, but there are complex arrangements over there. So you can primarily invest in the developed market. One possible suggestion that I can suggest for you is use Gift City products. In Gift City, one interesting product I came across was from HDFC Life International. They have got a investment policy wherein which they have provided fantastic funds and innumerable strategies. I wish I could tell you here, but because of the complexity which gets involved, I will resist telling these things. All that you have to remember is, via Gift City, it's possible for you to invest in both developed market as well as an Indian market under one plan. And you have also got strategies to adjust your exposure according to the market movement. Let's say Indian market goes up a lot, you can sell and you can come to the developed market, or if the developed markets give you a lot of positives or you make money over there, you can rebalance it into the Indian market. So thereby you can hedging developed market versus Indian market, dollar versus Indian rupee. That's a possible scenario. If any of you are interested to invest in a product which allows you to invest both in the developed world and the Indian markets in single plan, then you can make best use of services provided by NRI Money Clinic. Just send us the message, Gift City Plan. Our numbers are shown in the description box below. We have provided a link to the WhatsApp. Click on the link, it takes to the WhatsApp. Send us a message, Gift City Plan, and one of our experts will be able to help you in designing what exactly you need to do to create that excellent investment plan for you. Gift City comes with several other advantages. You don't need to have an NRI NRO account. The investments in Gift City will not come under the FEMA law. You have no repatriation links. Your monies are invested in the form of dollars, not the INR. So you invest in dollars, take out in dollars. For those of you who live in Dubai, the biggest problem you guys face when you retire there is, where will my retirement income come from? That problem can be solved from your investment in Gift City. It's possible to make it 100% tax free. Several strategies are available. One size doesn't fit all. We need to check individual cases and see what suits you the most. But this problem of, should I invest in developed market? Should I develop in Indian market? How will I minimize my tax incidence? How can I create a perpetual income during my retirement if I were to live outside of India? Can be solved by investing through the Gift City. So if you are interested, send that message now. Dear viewers, if this episode helped you to understand how you should position your investment portfolio to make most out of the developed market as well as the Indian market, do give me a thumbs up. If you are somebody who is watching this episode for the first time, or if you are yet to subscribe for this channel, please hit that subscribe button and press the bell icon. Do not forget to share these videos with your near and dear ones, friends and relatives, and on all the WhatsApp groups on which you are connected with. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another episode next Friday. Till then, stay safe. Jai Hind.
Press the bell icon for more details and subscribe our channel.